Hello students, welcome back to 30th session on Accounting 1, in which we are concentrating on petty cash book and its preparation. Let me have recap of previous sessions. So in all previous sessions, we discussed cash book, types of cash book, preparation of simple cash book, 3-column cash book and preparation of 3-column cash book. In this session, we are going to concentrate on meaning of petty cash book, impress system of preparing petty cash book and format of petty cash book under impress system. So at the end of the session, you will come to know what is petty cash book, why petty cash book and how to prepare petty cash book under impressed system. First question is why petty cash book? You know that in every business concern, there are numerous petty expenses such as postage, carriage, cottage, conveyance, travelling, etc. These expenses are required to be paid in cash. When we mix these expenses with the main cash book, which we studied in last session, definitely the cash book will become bulky and unwieldy. That's why we need to have a separate cash book to record amount paid towards all these numerous petty expenses. Here arises need for preparation of petty cash book. Try to understand. All business concern have to make certain petty expenses every day and these petty expenses will be paid in terms of cash. If you mix these petty expenses in main cash book, definitely cash book will become bulky. To avoid this, it is better to have a separate cash book particularly for these petty expenses known as petty cash book. What is petty cash book? The word petty is derived from French word petit, which means small. So, a petty cash book is an additional cash book maintained for recording numerous small cash payments. Try to understand. A cash book which is maintained in addition to main cash book for recording numerous petty payment constitute petty cash book. It serves different purpose. What are all that? It reduces number of entries in main cash book so that we'll record only main transactions in main cash book, main cash transactions in main cash book. It relieves the burden of chief cashier from making numerous petty payment and keeping record. In the sense, chief cashier can concentrate only on preparation of main cash book rather than concentrating on making petty payments and keeping record of it if you prepare petty cash book or if organization maintains petty cash book. It minimizes chances of mistake in recording petty payments and at the same time it provides clear-cut information about amount spent on each petty payments. So these are the different purpose that a petty cash book serves. That's why we here means organization need to have a separate cash book known as petty cash book for petty cash payments. Types of petty cash book. A petty cash book may be either simple petty cash book or analytical petty cash book, also known as columnar petty cash book. If petty cash book contains only one amount column for all petty expenses incurred, it is called as simple petty cash book. Try to understand. Under simple petty cash book, we have only one amount column for all petty expenses incurred. So if there is separate amount column for each petty expenses spent, then that indicates analytical petty cash book, also known as columnar petty cash book. You are having separate amount column for each and every petty expenses that an organization spent. So this facilitates to analyze and establish control over various petty expenses incurred. So there are two types of petty cash book. One is simple, the other one is analytical. Analytical means, so we have separate amount column for each petty expenses spent so that it facilitates to analyze and establish control over various petty expenses incurred. So format of petty cash book under columnar or analytical basis. You just look at the format. So this is what format of petty cash book under columnar and analytical basis, because almost all business concern are preparing petty cash book under columnar basis. So amount received will be recorded in this column, cash book folio, date, particulars, voucher number, total payment, analysis of payment. See, there is separate amount column for each type of petty expenses spent by the organization. Again, there is no hard and fast rule. So in case in a particular given problem, you do not have printing expenses, means you need not write printing here. You can write other expenses given in the problem. So next column is ledger folio, next column is ledger accounts. So let me have brief idea of what we will write in each column. Amount of cash or check received by petty cashier from chief cashier will be recorded in amount received column. Means what amount petty cashier or check petty cashier will receive from main cashier will be recorded in amount received column. Cash book folio column is meant for recording page number of cash book where payment made by cashier to petty cashier is recorded. So next one, date column is meant for recording date of receipt of cash or check from main cashier or for recording date of making payment for various petty expenses. Particular column is meant for recording details of cash received and payment made. So where we are recording details of cash received and payment made. Serial number of voucher obtained by petty cashier while making payment will be recorded in voucher number column. Amount of each payment made by petty cashier are recorded in total payment column. So means for each payment made, we will record first in total payment column. Analytical column is meant for recording amount of petty expenses or petty payment made in their respective column. In the sense, in case if you pay printing, you will, in addition to you recording under total payment column, you will record under printing column also. In case if you pay for postage, in addition to make recording payment in total payment column, you will record under postage column. So analytical column is meant for recording amount of petty payment made in the respective columns. So page number of ledger where accounts of each class of payment and petty cash account are kept is recorded in ledger folio column. And in ledger account column, we are going to record small payment made on personal account, small payment made for purchase of asset, small payment made for some other petty expenses for which there is no separate column left in analysis of payment column. Try to understand. In analysis of payment column, we will record each and every petty expenses for which payment is made separately in addition to recording the amount in total payment column. So if there is some other expenses for which there is no column in analysis of payment, so definitely we will record in ledger account column payment made to personal account. For example, you paid to X company, you paid to Mr. S. So means payment made to personal accounts will be recorded in ledger account column. In addition to that, in case if you make payment, small payment for purchase of a small asset, for that, for such payment also you will record in which column? Ledger account column. So this is all about format of petty cash book. So how we will prepare petty cash book? We will follow the same format. Which format? Columnar basis or analytical basis, not simple petty cash book. Before preparing petty cash book on columnar basis, we should aware of how chief cashier will make payment to petty cashier for petty expenses. So there are two systems of making payment by chief cashier to petty cashier. One is fixed advance system of making payment. The other one is interest system of making payment. Under fixed system, also known as ordinary system of making payment, the chief cashier, after making rough estimate of amount required for petty expenses during a given period, gives a fixed sum of advance in cash or check to petty cashier. Try to understand. Under fixed advance system, main cashier will have a rough estimate of amount required for petty payment during given period. So then he will give that fixed sum of advance either in cash or check to petty cashier. At the end of given period, petty cashier will submit the account of petty expenses to chief cashier, and whatever be the amount spent by petty cashier, he will get same fixed amount as advance irrespective of the next time period. Try to understand. At the end of a given period, for example, at the beginning of January, main cashier estimated 400 rupee is the petty cash requirement of next month. Then at the end of January, at the beginning of next month, he will make a payment of 400 rupees. Then at the end of February, after spending out of this 400 rupees, petty cashier will submit the account. For example, assume that petty cashier spent 360 rupees. So then at the end of that month, means February, for next month, main cashier will make payment of rupees 400, which was fixed by him at the beginning itself. Even though petty cashier spent 360 rupees, he will get 400 rupees next time again for next month. So this is nothing but fixed advance system of making payment, also known as ordinary system of making payment for petty expenses by main cashier to petty cashier. Then under impress system, what it is? Chief cashier, after estimating amount required for a fixed period, will grant cash or check as estimated. So this estimated amount granted by chief cashier to petty cashier is known as float, also known as impressed money, which means advance money given by chief cashier to petty cashier. So till the end of that period, the petty cashier will make payment out of that impressed or float or advance money and submit accounts of petty payments to main cashier. After verification, the chief cashier will grant amount for next period, which is equal to amount spent by cashier during previous period. As a result, petty cashier will be left with opening balance, which is equal to in petty cash impressed or float. Try to understand. So being a main cashier, I will estimate what is next month requirement for petty expense. Assume that I estimated 500 as next month requirement. At the end of this month or at the beginning of next month, I will make 500 rupees payment either in cash or in check to petty cashier. So this 500 rupee is known as float, also known as advance money given by chief cashier to petty cashier. So out of this 500 rupees, petty cashier makes the payment. At the end of next month, he will submit the account. Being a main cashier, I will go through the accounts. Then, for example, assume that petty cashier spent 450 rupees. I will grant next month, for the next month, I will grant only 450 rupees. So, he has left with 50 and now I am granting 450. Now total is 500. What was the interest fixed by me? 500. Now also how much petty cashier is having? 500. So this is what impress system. Did you get my point? Impress means advance money. I estimated next month requirement as 500 rupees. Try to understand. I paid 500 rupees to petty cashier. He made payment totally 450 rupees. He submits the account. After looking at the account, again I will grant only 450. I know that 50 rupees is with petty cashier. So now 450 plus 50. Now petty cashier will be left with opening balance in next month, which is equal to 500 rupees. That was the interest fixed by me. Me means main cashier. This is all about impress system of making payment by chief cashier or main cashier to petty cashier. So due to various advantages associated with impress system of making payment, petty cash book is also prepared under impress system of making payment. Try to understand. We are preparing petty cash book under analytical basis, but assumption is made that main cashier will follow impress system of making payment. So posting from petty cash book to ledger. How we are posting entries from petty cash book to ledger? Because petty cash book is book of original entry. So a petty cash account is opened in ledger as and when petty cashier receives cash or check for petty expenses from main cashier. Try to understand. When petty cashier receives amount for petty payments from main cashier, immediately petty cash account is opened in ledger. It will be debited with that amount. All petty amount or payment are debited to respective payment account, credited to petty cash account periodically after passing journal entry in journal proper. Try to understand. So all payments made out of that cash will be debited to particular expenses account. For example, printing expenses account, postage account, conveyance account, respective payment account, and credited to petty cash account periodically after passing journal entry for all those petty payments in journal proper. Petty cash balance is entered on debit side of trial balance and on asset side of balance sheet at the end of accounting period. Means at the end of accounting period, whatever petty cash balance left will be shown on debit side of or debit column of trial balance and on asset side of balance sheet. So this is how we are posting entries from petty cash book to ledger accounts. So we will see how to prepare petty cash book under analytical system, assuming what is that impress system of making payment followed by chief cashier, particularly next session. Till that, take care.